I'm Terry Saka, and this is Rigged Against You. Today, we're going to discuss something very important you're seeing in the headlines. The silver markets are freezing, but I want to explain what that means because there's a big lie behind the scene. And so I'm going to explain for many people that don't understand how the commodity physical silver works around the world so you can best gauge moving forward what is important for you and your portfolio, because you're going to understand real quick the importance of physical silver, but you should understand how it works. So I like to get in and explain this a little bit, what's going on with the market freezes, why you're hearing from certain dealers that they don't have inventory, what's really happening. So before we get going, please consider subscribing, share the podcast. I don't do a whole lot, so you won't get inundated, but it is important information when I do speak, so it'll be good for your future, for you to make wise decisions going forward, because there's a lot of fireworks coming, and it's best we take it seriously. So in the silver market, silver as a commodity trades on the futures exchange. So it's a paper contract that actually is sold in the futures market. And it's a paper contract that says in the future, I will buy this physical silver, whatever the price is at that point. So you buy it lower, the price goes up, you're getting a pretty good deal, and then you get physical delivery of the product. Now, a lot of times in the past, people were just trading it. So you can make a lot of money on silver futures. In America, it's 5,000 ounces on a contract. That's $5,000 profit per dollar move. And so a lot of traders would just trade. They would trade it, sell it, or if they, instead of actually taking physical delivery, they would just settle in cash. That's what made this thing move, which provided liquidity. Things are changing. So in order to actually do a physical contract, there's something called margin. And the margin is how much you have to put up in order to buy the contract. And typically it'll be pretty low. So if you're buying a $5,000 contract, maybe you have to have $10,000 in margin on the side. Well, what they try to do, the bullion banks and those that are trying to control the mass control of what's taking place here, they try to set the margin rate at such a rate that it will become difficult for people to hold contracts. So what they're doing to try to keep the price down, which isn't really working too well, is they're raising the margin rate. The margin rate has gone 20%, then 30%, then 40%. And so all of a sudden you have to put up a lot of cash in order to buy a futures contract. That typically slows down the demand, which would then keep the price from continuing to rise. That's one aspect. Unfortunately, it's not working, which is interesting. So people are willing to put up the margin because in the end, and this is where it's important, they want the real physical silver delivered. And this is something we haven't seen. Now, obviously people do. You have needs, Elon Musk, electric vehicles, industry, yes. But the demand is coming from sovereign and institutions. And this is the big part here. What you're seeing on this price run, and a substantial run this year, I think we're up almost 70% now for the year in silver, is not because of retail people, not because of we the people. Retail, for whatever reason, are all in the stock market. Even though smart money, Warren Buffett has $350 billion in cash, smart money is getting out of the stock market. Retail people are all in. It is a huge mistake. You are going to get held with the bag. And it's just how they trade. This is what I was trained on at AG Edwards, how the cycle moves. They are using you. And so if you're not properly diversified, which I know too many people who still have too much in the stock market. I know you have a financial advisor. They're in their older years. They're wise. You've had great relationships. They know what they're doing. Well, sorry to say they don't. They're out of touch because we're in a fourth turning event, a massive financial overhaul of the system with BRICS and the Chinese and settlement currency that I talk about in other podcasts. Our world is changing so rapidly that a lot of these older financial advisors, they just don't have a handle on it. They don't understand it. And so they're traditional. And a lot of you in the retail that are in their late 60s, 70s, even 80s, you're thinking traditionally. The stock market, this is what you do. The mutual funds, this is how you roll. You are missing out substantially on a big change in your retirement. This year alone, the stock market is up maybe 4%, and yet silver is up almost 70%. Big difference in your portfolio for retirement. Now, for a lot of people, they think, well, it's too high. I shouldn't get in. I'm here to tell you it's just getting started. We are in the second inning because it's no longer about the manipulation of the price, which they're losing control over. It's about the world actually needing the physical commodity. It's changing. And so the second part, not just in margin cost to buy the futures contract, this goes into the refineries and the minters and the big producers. Now, when they bring on a lot of material, they don't just bring it on raw and just own it, because that's speculation. And so you have to hedge yourself, whether you're using options or other means. And the big one, for instance, refineries. They melt down junk silver. They melt down silver, and then they send it overseas to London. Typically, they'll send it by boat, and that can take 2-3 weeks. Now they're sending it by airplane. It's so expensive to do, but they're doing it because they need the silver in London. London froze. The market system is freezing, but it's not what you think it is. There is enough silver in the system. The problem is it's not available on the short term for the long term contracts that are coming due. There's kind of some kinks and glitches taking place. And so what you're seeing is a glitch in the system. It's going to get itself worked out. But in the meantime, premiums are exploding. Things like Silver Eagles have really gone up substantially in premium and will continue because the mint hasn't produced even remotely what they're supposed to by law. So the second way these refineries and big producers protect themselves, they will lease. So what happens is they have a large bulk of silver and they will go and borrow cash, and the typical lease rate is like 1%. So they're paying a little bit to cover themselves, and they do it through the lease. Well, lease rates, and this is the first time I have ever seen this, lease rates are up to 100%. It no longer works. So refineries, large producers, they cannot hedge themselves because the lease rate makes it financially improbable. They make no money doing it. So why would they do it? So you're seeing a freeze in the system. They're not taking in material. Then there's the demand side. So it gets confusing because on one hand, there's a big demand, but on the other hand, there's a lot of supply, but it's not in the produced form and it's not in a position where they can take possession. So what you're seeing is the derivative contracts that actually control the market system, London, the COMEX here in the United States, they are breaking down and they're losing control. And so right now, the market is frozen because they're not producing, because they can't properly hedge. And so now you got a real problem in the system. And so a lot of dealers can't get their hands on material because a lot of dealers are really just brokers. And so they're buying government coined products that are no longer available or not producing, especially in bar form, and they're stuck. These are brokers. Cornerstone Asset Metals is direct to the source. We're involved in refining and minting. And so we deal in direct bullion. So we don't have that problem. So Cornerstone still has material in silver. Absolutely. But it's not as big of an issue as you think. They're going to resolve it. But here's where it gets really good for we the people. This is just the second inning. It's just getting started. $50 silver will be a new bottom. It's going to continue to rise, my guess, through the end of the year when the stock market sells off. And believe me, that stock market sell-off is coming. It's just baked in. It is coming. And then that's going to force rates to go down more. The dollar is going to continue to decline. And with rates going down, dollar declining, perfect storm for gold and silver. That's why you're continuing to see gold here at 4,200 an ounce. Silver, they sold off overnight from 53 down to 50, almost 49, and it's bounced right back to 52, and it's continuing. Very, very strong markets. Here's where it gets tricky now. As you're buying physical silver and gold, they work off of what we call a spot price in the market, the future spot price. First time I've seen like this anyway, there's almost an arbitrage. There's a big difference. There's a world spot price, and then there's a spot price you'll see on CNBC, and the spot prices are different. And so depending on what dealer you're going through, what spot price they're using, where they're buying the material from, all of a sudden there's big kinks in the system. Big kinks. I've never seen it this way before. And so the world spot price is more in line. You have Shanghai, you have India, Russia. India just froze ETF purchases. They're not even allowing people to buy into the silver ETFs. They cannot guarantee the security of the metal getting it. So the market's freezing. Now, I do believe it's going to work itself out. But right now, the spot price being so radically different shows you what's really going on behind the scenes. The world needs and wants the actual physical commodity of silver, even platinum. Platinum is non-existent. The American Mint has not produced American Eagle platinum American Eagles in like 3 years. Platinum is very dry out there as far as actual physical available. Silver is in such demand. I talked about it with Saudi Arabia building NEOM, and in China and India and all of the solar panels and electric vehicles and AI and robotics. Silver is a finite commodity. We're not pulling enough out of the ground to meet the future demand needs. And you're seeing a scramble by nations worldwide getting the actual physical and taking it into possession. This is a big deal. Because they need it, they now have to store it. They're looking everywhere to get it. That's why central banks are now buying physical silver, first time in a long time. That's why silver was added to the critical minerals list here in the United States. It is becoming absolutely essential for physical silver to be held in possession because you need it. And it's something where I'm not too concerned about them controlling, because just about every business needs silver that produces stuff. I mean, you need silver for electronics. You need silver for mirrors. You need silver in dentistry. I mean, it's just unbelievable what silver is needed for. And so I'm not concerned about that aspect of it. But we're dealing with such a radical crack in the system. It is being exposed. The manipulation in derivatives is exposing the system. The bullion banks who have been selling silver they don't own to keep the prices down are being exposed. They're in a lot of trouble. You want to talk about a short cover. They're going to have to pull the trigger and cover. This is not going down like it used to in 2008 or 2011 and 1980. We're not going to see this again. They will have to cover. And when they go to cover, you are going to see a massive jump in physical silver. My guess, I'm waiting to see the Commitment of Traders report. I would think they're starting to trickle into cover. I don't know what they're going to do, but they're losing billions and billions on silver rising like this. And with the world wanting the actual commodity, they're in trouble. So what you're going to see when this short cover takes place and the manipulation factor is off the table, silver would jump really fast. I won't be surprised to see it jump $25 an ounce within weeks. That's just what's going to happen because there are no more sellers. They're going to need the prices to be a lot higher to entice people to sell. Many retail are not even in on this. And so you understand now how they protect it through the markets with margin rates. They're trying to suppress it through lease rates. They're trying to suppress it with lease rates at 100%, margin at 40% and rising. You would think that would slow down the demand, and it is not. Premiums are on the verge of exploding. So right now, if you're considering, which I would highly recommend, being properly diversified. Too many people are way overweight in that stock market. There is $1 trillion in the stock market with leverage. That is a loss of epic proportion if we get a stock market correction, which I'm thinking is coming. It's in the books. It's on the data. Warren Buffett knows it. Smart money knows it. But uniquely, retail people are still in. It's that fear of missing out, the FOMO. And I'm very confused by this because you're missing tremendous opportunity for your retirement. So it's all about retail. If we have this type of move in silver, now here we are in the low 50s. This was purely institutional driven. This was done by the institutions, not people buying silver. When the retail wake up and start to buy silver, you are going to see a massive jump. I won't be surprised in the near future to see silver in 3 digits. And it's not even about that profit. It's about the fact it's going to dramatically outperform the stock market and dramatically outperform most other investments. And so it's a safe place to be right now because the world is moving into this fourth turning. And as we move into this fourth turning and they move into stable coins, as the financial system is on the verge of collapse, and not just the United States, we're actually doing better than most people in the world. But you have Germany on bankruptcy, France is in bankruptcy, and all else fails, they go to war. That's why they're pushing the war with Russia. I think Trump comes in and really pushes the button right and tries to get a settlement with Russia. Europe is in trouble because financially they're not sustaining. And so in the gold and silver market, you're seeing just a global demand for real assets. No one is trusting currencies anymore. They don't want to sit on currency. They don't want dollars. They want assets. Land will probably be one down the road once the rates come down. But gold and silver will continue. Even Harnett, from Bank of America, very, very smart guy, knows his cycle well, even said gold will probably be $6,000 by spring. Wait until you see where that puts silver. And remember, we're still in a silver to gold ratio that is over 80. Anytime through history, when you're over 80, you're selling gold and buying silver because the return on the investment is too big. You don't want to be in gold at that point. Gold at 6,000, just in the 80s here, that puts silver at 75. Once that ratio breaks, we are looking silver in the mid 100s to $200 down the road. And it's going to happen. But it's an asset you have in your hand. And that's why the world wants so badly to control the actual commodities. And this isn't just silver, gold. It is as you hear the dings, this is how busy things are right now. I'm just amazed at all the action that's taking place. And a lot of the dealings I'm involved with are behind the scenes, more in the institutional side, discussing things with players that are not in the mainstream media. This isn't retail, but their people are waking up and they're starting to realize there's one place to be better off than in the stock market, and that is in commodities. Silver and gold happen to be the most liquid, and know that if you're investing in paper, that is a dangerous place to be as far as silver and gold. I would be owning physical because if it does systemically collapse, which I'm kind of hoping it doesn't, but I don't trust Europe and what they're trying to do with Russia. They could collapse the stock market. And if that stock market goes off, it's coming down 50%. It's going to be ugly. And so silver and gold could sell off at that point, too, as they take profit. But after that, you're going to see a dramatic rise in gold and silver prices. But no, even at $75 silver, you're still going to want to buy it because it's an asset. It's going to continue to rise. And if I really told you where silver is probably going, you wouldn't believe me. So I won't even bother. So until next time, just understand, yes, it's a market freeze, but it's only because they're establishing kinks in the system that really weren't exposed before. It's going to get smoothed out. There is physical silver out there for the demand, but it's in what form and where it is. I know we don't have too many mining projects coming online. They'll be years and years away. There has been some discoveries, but nothing that is going to take care of the short-term issue. We are probably in the second inning here as we're entering into this commodity super cycle. So just stay very focused because it makes a big difference. You have 400,000 in the stock market. You want to retire with 450,000 or you want to retire with $1 million? It all depends on where you put your stuff at what time in the cycle and time and season in history. I cannot believe these dings. I probably should go, but God bless you. And just know, give me an email if you want to. Contact me at clientsupport@cammetals.com if you have any strange questions. No question is a bad question. It is a very unique time in history and one to be really focused on because the difference it makes in your retirement and your future is substantial. So until next time.
With all of the recent changes in the political and financial markets, there has never been a better time than right now to invest in silver and gold. When governments simply print billions of dollars in paper money in hopes of solving financial shortfalls, you know that it is time to buy and hold assets of true and lasting value. Free information is available to you right now by calling 888-747-3309. Whether you are a new investor or you're interested in preserving the value of your retirement accounts, we make it easy for you to make smart decisions for your financial future. The specialists at Cornerstone are here to serve you, work to satisfy your retirement goals, and communicate with respect. Call us right now at 888-747-3309. That's 888-747-3309. Or visit us online at cornerstoneassetmetals.com. That's cornerstoneassetmetals.com.